Hello. Yes. Very good evening, everyone. First, let me know that is the voice is audible or not. It is clear or not. Audible. Okay, great. And I'm very happy that the first session, whatever we have taken, that was useful for you all. And I'm happy that I'm able to save your time as per revision is concerned. And this will only motivate me to take more and more session in the coming days. Okay. So really I'm happy, and if you are getting benefit out of this revision, then of course whatever I'm doing, it will be actually beneficial. It will be actually what will have some worth about this. Now coming to today's session, we'll take two India's 19 and India's 12. Both these India's does not require revision of concept much. Correct. Now if you have done previously the concept, then if you do only the expected question, it will help you, because can I say this is totally based on the question. India's 19 has few question. ICA will ask definitely question from that particular question only, means they will not create any new question from my point of view. Similarly India's 12, from my point of view, they are not going to create any new question in India's 12 also. If you have done the content previously, don't waste your much time in the content. Give more time in the question. I will say revise all the question whatever is given in ICI study matter here. Okay. Yes, sir. So coming to India's 19, can we start first? India's 19, are you all ready? And of course, don't forget to press the like button, because the more the like I am getting, it will also motivate me. So don't, if you are coming to listen this class, don't forget to place the like button, because your every like will bring a smile on our face. Okay. Now of course, if you are new to this channel, don't forget to subscribe this channel. That is a common thing everyone says, therefore I am saying this point. Okay, correct. Now normally I don't say this thing, but normally every person who is in YouTube normally say that subscribe my channel, subscribe my channel. So I am also saying subscribe my channel. Okay, but I know that if my student will always subscribe me, nothing to worry about that. Yes sir. Chalo, can we start? Yes, sir. Let us come to question number one. In this, actually, there are two type of topic from where question may come. One is the short-term compensated absences. So till now, I think only one type of question, this question number one, have been asked in exam. There are some new question have been introduced on that. That question can be asked in exam. And second, about the defined benefit obligation and plan asset, that type of question can be asked. There are these two, normally this type of two question normally they ask in exam. Let us come to question number one. It has been asked in exam, I think, few times. Let us do it. It can be repeated. This question can be repeated. The Private Limited had a head count of around 1000 employee in the organization in 2010-11. As per the company policy, the employer given 35 days of privilege leave, 15 days of sick leave, and 10 days of casual leave. Out of total PL and SL, 10 and 5 can be carried forward to the next year. So how much can be carried forward? 10 and 5 can be carried forward. On the basis of past trend, it has been noted that 200 employee will take 5 days PL and 2 days SL. Is the probability of availment is given. They can carry forward how much? 10 and 5, but out of that they can only avail how much? 200 employee can avail 5 days PL and 2 days SL. Similarly 800 employee will avail only 10 PL and 5 sick leave. So can I say we need to create a provision based on the probability of availment. We can carry forward how much? 10, but we can only take how much, we can only avail how much leave? So 200 employee. So can I say for 200 employee, for 200 employee, we should make a provision. Are you able to understand? we should make a provision for 5 days PL leave and 2 days sick leave. Means in the question only solution has been given. And for 800 employee, we should make provision for 10 days PL and 5 days SL. Correct now, because in this question they have not given salary per working day, so therefore you can't actually calculate the amount of provision. Let's read the answer. They have asked what is the treatment of short-term compensatory absence. You can see Fiscal Limited will recognize the liability in the books to the extent of 5 days of PL for 200 employee and 10 days of PL for remaining 800 employee. So you can see 5 days for 200 employee and 10 days for 800 employees. Similarly, for sick leave, 2 days sick leave for 200 employee and 5 days sick leave for remaining 800 employee in the books as an unused entitlement that has accumulated in 2011, 2010 and 11. The first answer is very much simple. Okay. I have understood some problem. Now okay. Now it is okay. Now you can see. I think you have understood what I am saying. So what I have read the question that we should create a provision based on the probability of availment. Based on the probability of availment. So 200 employee can carry forward 5 days PL and 800 employee can carry forward 10 days PL. So we should make a provision for that much carry forward, that much leave which can be availed. Similarly, 200 employee can avail 2 days sick leave and 800 employee can avail 5 days sick leave. So based on that we should create provision. Understood this point? The first point have you understood? Also the company has been incurring profit since 2009. It had decided that in 2010-11 to distribute a profit to its employee at a rate of 4% during the year. However, due to the employee turnover in the organization, employee turnover means employee will leave the company. The expected payout of Cisca Private Limited is expected to be around 3.5%. The profit earned during 2010-11 is 2000 crore. So can you say we get a provision for bonus based on the expected rate? So of course the expected rate is 3.5%. So 3.5% of 2000 crores should be created as provision for bonus. So what they have done? Cisca Private Limited will recognize 3.5% of 2000 crore as a liability and expense in the books of account. The next point is Cisca Private Limited has a post-employment benefit plan also available, which is in the nature of defined contribution plan. It is this defined contribution plan where contribution to this fund amount to rupees 100 crore, which will fall due within 12 months from the end of accounting period. The company has paid 20 crore. Already they have paid how much? 20 crore. So can you see the expense will be 100 crore, out of which 20 crore has been paid and the liability will be 80 crore. So they should recognize the liability of 80 crore which is not yet paid. So that will be payable. That will be only answer. You can see under Ind AS 19 the amount of 80 crore may be recognized as a liability after deducting any contribution already paid. Correct? However, if the contribution already paid would have exceeded the contribution due for service before that, this is not required. Also 80 crore will be recognized as an expense, but from my point of view liability should be 80 crore but expense should be 100 crore. So whatever you have paid that also become an expense. So from my point of view the expense should be 100 crore and the liability should be 80 crore. Understood? Yes sir, I hope you have understood this point. Question number 1 is clear. This question is already asked in exam, can be also again repeated in exam. Come to the next question about the short term compensated absences. Let me come to that question. Come to question number 4. This is very important. Mr. Niranjan is working for Infotech Limited. Consider the following particulars. Annual salary they have given 30 lakh. Number of working day during the year is 300 days. So can a salary per working day will become 10,000 per day per working day. So this become salary per working day. Leave allowed initially first year 10 days, leave taken 7 days, leave unutilized carry forward to next year. Those 3 days will be carry forward. 3 days will be carry forward. Now it is given that based on past experience, Infotech Limited assume that Mr. Niranjan will avail unutilized leave of 3 days. So out of these 3 days, they can utilize, means they can avail 3 days only. It means the provision should be based on availment, and we should create a provision of 3 days into 10,000 means 30,000 provisions should be created in the first year. Understood? So first year how much provision will be created for the carry forward of leave? That is 30,000. So can you say first year the EB expense will be 30 lakh. and the provision will be how much? 30,000. The total EB expense will become 30 lakh 30,000, because the number of working day, will be 300. Are you getting? 300 days. Understood? And they have extra work for how many days? Unutilized leave is what? 3 days. 303 days they are working. Therefore, the total EB expense will be 30 lakh 30,000. So what journal entry they will pass? The journal entry will be what? EB expense will be what? 30 lakh 30,000. To bank account, it has been assumed that 30 lakh has been paid. So 30 lakh has been paid, and they should create a provision for leave encashment, or you can add a provision for short-term compensated absences, 30,000. Understood? Yes, sir. Now coming to next year, what happened? Next year, what happened? 10 days was leave allowed, and carry forward is 3 days. That means total become 30 days. Out of 30 days, entire 30 days has been availed. Means can I say there is no unused leave? It means, can I say, will not create any new provision in the next year. Will not create any new provision in the next year. But can I say whatever provision created in the last year will be reversed. Whatever provision created in last year will be reversed, because in this particular days they have worked only for 300 minus 3 days minus 3 days, so 297 days they have worked. Therefore the actual EB expense should be based on 97 days, that is 29 lakh 70,000. So 30 lakh was EB expense, and provision reverse will be 30,000. That will become what? 29 lakh 70,000. Understood? You can see the answer has been given that way only. The 29 lakh 70,000 will become total EB expense. So what journal entry will do? EB expense 29 lakh 70,000, provision account debit 30,000. To bank, payment will be as per the contract, that is 30 lakh. I hope this point have you understood. Suppose in the same question it has been given that out of these 3 days leave, it has been assumed that they will avail only 2 days. It is given that they will avail only 2 days. The probability of availment is not 3 days, probability of availment is 2 days. Then we should create provision based on 2 days in the first year. Then your EB expense will be 30 lakh plus 20,000, that is 30 lakh 20,000. And in the next year, whatever provision created in last year will be reversed, irrespective of actual availment. To last the next year, what you will do? 30 lakh minus 20,000, that will be what? 29 lakh 80,000. If the question has given that instead of 3 days they will now avail 2 days. Understood? Have you understood this particular question? This question can be expected in exam. Have you understood? Question number 4, batao. Just say yes sir or no sir, everyone. Question number 2, have you understood? Yes sir, got it. This question may come, so similar question will come. We'll like to take one more question. It's also very interesting. Question of 5. SL Limited has 350 employee, same as a year ago. The average staff attrition rate observed during the 10-year represents 6% per annum. Means out of 350 employee, how many employee will leave the company? 350 into 3%, 350 into 6%, sorry, percent. So 21 employee will leave the company. So can I say whatever employee will leave the company, new employee will join based on that replaced employee, meaning new employee will replace the old employee. It will be assumed in the question, even though nothing is given, that new employee will replace the old employee who have left the job. So can you say in the current year there will be 350 minus 21 old employee, and 21 will be new employee. Understood? Yes sir. SL Limited provide the following benefit to all the employee: paid vacation 10 days per year regardless of the date of hiring. Regardless of date of hiring means if they have joined during the year also, the 10 days per year will be given as a paid vacation. Compensation for paid vacation is 100% of employee salary, and unused vacation can be carried forward for 1 year. As of 31st March 2001, unused vacation carry forward was 3 days per employee. Average salary was 15,000 per day, and accrued expense for unused vacation was 65 lakh. Means much provision was created in last year. So this is the opening provision for current year. This was the provision created in last year. So 65 lakh is the opening provision. Understood? During 2001 2002, employee took 9 days vacation in average. 9 days vacation they have taken in average. Salary increase was 10%. Salary increase was how much? 10%. How would SL Limited recognize the liability and expense for this benefit as on 31st March 2002? Pass the journal entry to show the accounting treatment. So just try to understand how many old employee are there. 350 minus 21 is 329 employee. You can see, you can do in this way. Let me explain. How much old employees are there? How much new employees are there? Old employees 329, new employees 21 employees. What is the leave granted? 1010, correct. What is the brought forward leave? How many leave brought forward to that is given? The unused vacation carry forward was 3 days. Carry forward is 3. That brought forward from previous year will be 3 days. But for this employee it will be nil. It will become 13. It will become 10. Understood? Now they have said that in the current year they have utilized 9 days leave. 9 days leave is how much is left? Here 4. Here it is 1. Now the question is that this 9 leave will be adjusted first from brought forward leave, yeah, from current year entitlement. That will be based on the information given in the question. That will be based on the information given in the question. It can be on FIFO basis, it can be on LIFO basis. If question is silent, always do FIFO basis. FIFO basis means that first this 9 will be used from the brought forward and balance will be used from what? Current year entitlement. Current year entitlement. Which can I say? This minus 3 done, and 9 means 9 minus 3 is 6. 6 will be used from this to current. This 4 is now will be carry forward to the next year, will be carry forward to the next year. Understood? Yes, sir. Similarly for this, so this one will be carry forward because the brought forward leave is what? 0. Now in this question, once again the probability of availment is not given. Ki out of this, how much will be availed in the next year? How much will be availed in the next year? If the probability of availment is not given, we'll always assume the probability of availment is 100%. 100%. Now we'll multiply with what? Average means salary per working day. It is given salary per working day for the current year is increased by 10%. The last year it was 15,000. So 15,000 increased by 10%. It will become how much? 16,500. So we'll do multiply by 16,500 multiplied by 16,500 and multiply by number of employee. This is 329 and this is 21. Understood? So how much it is coming? Batao. This 329 multiplied by 16,500 multiplied by 4 is coming how much? 20 is how much? 2 crore 17 lakh 14,000, and this will be 21 into 16,500. This will be 3 lakh 46,500. Total become 2 crore 17 lakh 14,000 plus कर दो तो total will become 2 crore 20 lakh 1,500. Such provision will be created for current year and last year provision will be reversed. Last year provision will be reversed. Means what journal entry will do for this? Will create one, will pass one journal entry for this amount. EB expense account debit to provision. EB expense account debit to provision and last year provision means the opening balance of provision will be reversed. We'll pass one more journal entry. Provision account debit to EB expense. Provision account debit to EB expense. Understood? I have done some wrong calculation. Yeah, same correct calculation. Okay, you have given this amount. Chalega? Understood? Have you understood what I am saying? Now suppose in the same question it was given that it is LIFO. Suppose they have given LIFO, then your answer will change. Suppose they have given LIFO, so can is this 4 will be first adjusted with what? The current year entitlement. First adjusted with what? Means whatever 9, sorry not 4, this 9 leave whatever you have taken will be first adjusted with current year entitlement. So it will be minus 9 and 1 will be left, and this 3 whatever brought forward leave will be automatically left because it can be carried forward only for 1 year. Means this will be left. Is now on LIFO basis for old employee you will create provision for only 1 day, and for 21 employee of course you will create provision for 1 day. So of course your answer will change. So if the same question they have given LIFO basis, so your answer is going to change. So be careful about LIFO and FIFO. If question is silent, then use what FIFO basis. But if the question has given information about LIFO, then be careful. Then be careful. Have you understood this particular point? Hello. Have you understood this particular LIFO? You have understood LIFO? बोलिए. You need to respond yes sir, no sir, yes sir, no sir बोलते रहो. Correct ना? Yes sir, no sir बोलते रहो, so that I will also feel that you are understanding whatever I am saying. Have you understood LIFO? Understood LIFO. Chalo. Now let us come to some question based on defined benefit plan. Defined benefit plan means defined benefit obligation and plan asset. I am assuming that in LIFO 3 days leave salary will be lapsed. Yeah, in LIFO, because this 9 will be first used from current year entitlement. So out of 10, 9 you have used, so 1 will be carried forward. But these 3 cannot be carried forward for more than 1 year. So these 3 will be automatically lapsed. Therefore, you should create provision only for 1 day which can be carried forward to next year, which can be carried forward to next year. Understood? If question, I have said, right, if question is silent, use FIFO. In the given question, you can see the question was silent. Question has not given whether we are using FIFO basis or LIFO basis. So if the question is silent, use FIFO basis. But if the question has a LIFO basis, then you need to use FIFO only. Correct now? Write down somewhere. If the question is silent, always will use FIFO. If the question has mentioned LIFO, then use LIFO. Chalega? Yes, sir. Now let us take some question of defined contribution plan. That is also important. One by one we'll take all the question. I'm assuming that you remember the concept of defined contribution plan. Defined contribution plans, first we recognize current service cost, then interest cost, then measurement gain or loss, remeasurement gain or loss will be transferred to OCI, and that will never be recycled to PL. Then there is a concept of plan asset. I will explain with the question only. First, let us take one question of plan asset. On 1st April 2000, the fair value of plan asset was 10 lakh. The opening balance of plan asset. The plan paid benefit of rupees 1,90,000 and received contribution of rupees 4,90,000 on 30th September 2000. Normally, this contribution is received and benefit is paid at the end of the year normally. But if question has given at the mid of the year or on a particular point of time, be careful. So you can see this benefit has been paid and contribution is received on 30th September. The company compute the fair value plan asset to be 15 lakh as on year end, and the present value of defined benefit obligation amounted to rupees 14,79,200 on the same date. This is closing balance of present value of defined benefit obligation. Actual loss on defined benefit obligation were 6,000. So actual loss has been given on DBO. Compounding happens half yearly, means interest is computed on compounded basis, on compounded half yearly basis. The normal interest rate for the 6-month period is 10% per annum, while the effective interest rate for 12-month period is based on the following data. Now this all information is bekar. This 10.25 they have given effective interest rate. Now just try to understand whether you use 10% per annum compounded 6 months, or you have been given one 10.25% per annum on effective basis. Both are same only. This 10% per annum, this is 10% per annum compounded half yearly, and 10.25% effective rate of interest per annum are same. For example, just try to understand. Suppose you have 100 rupees. So first 10% you apply for 6 months. So this will come how much? This will come 5 rupees. Then can this 5 rupees will be also compounded. So next 6 months it will become 105 into 10% into 6 by 12. So this will come 5.25. Check karo 5.25, 105 in 10% in 6 divided by 12. It will come 5.25. So what is the effective rate of return? Become 10.25% per annum. So that they have given. Now this expected rate of return is actually not, word has not been used under Ind AS 19. AS 15 used to use this term. To expected rate of return, there is no concept of expected rate of return. However, I will say this 10% per annum compounded on half yearly basis, and the effective rate of effective rate of interest 10.25% per annum. Both are same. Both are same. This information is actually not at all important. Ignore this. Ignore this information. Ignore this information. Determine actual return, expected return on plan asset, expected return on plan asset. The expected return on plan asset, this term has not been used under Ind AS 19. This is actually interest income. Interest income based on discount rate. Based on discount rate. What is the discount rate? Discount rate is 10% per annum compounded on half yearly basis only. Correct? Also compute amount to be recognized in all the other comprehensive income in this case. You need to find out actual return first. How to calculate actual return? First, you need to calculate interest income. Interest income based on discount rate. So, what is the opening balance of plan asset? Opening balance of plan asset is 10 lakh. So, for first 6 months, the interest will be calculated on 10 lakh to 10% to 6 by 12. Correct? This is coming how much? Coming 50,000. Then last 6 months, so this 10 lakh will be increased by contribution received. What is the contribution received? Contribution received is how much? 4,90,000. And how much benefit paid? 1,90,000. So can you say we'll do plus 4,90,000 and minus 1,90,000 benefit paid, and this will add interest also 50,000. How much it is coming? 10 lakh plus 3 lakh, it become 13 lakh 50,000 on this 10% was 6 by 12. But how much it is coming? 13 lakh 50,000 into 10% into 6 by 12. What is the answer? 67,500. What is the total interest income? Plus 50,000 kar do, it is 1,17,500. Correct. This is the one way. This is a simple way to calculate interest. What you used to do in your bachpan. In this way only you used to calculate interest. Other way to calculate interest, as it is given in ICS solution, they have done in this way. Just try to understand. This 10 lakh is outstanding for the entire 1 year. You will use 10.25% because effective rate of interest is 10.25% for the entire 12 months. So 10 lakh into 10.25%, it is coming how much? 1,02,500. 1,02,500. And then how much was outstanding only for the last 6 months? That is, can I say 4,90,000 minus 1,90,000. This is only outstanding for the last 6 months. This is only outstanding for last 6 months. On this they have applied 10% for 6 by 12. So 3 lakh into 10% into 6 by 12. How much it is coming? 15,000. You can see both answer is same. Both answer is same. So ICA has used this way. I will say this is actually simple mathematics. In bachpan to used to calculate in this way. I will say you can use this way also, but if you have understood ICA solution, you can follow ICA solution also. Why to take risk? Follow ICA solution. Have you understood this interest calculation? Yes. In case of LIFO also, last year provision will be reversed. If last year provision always will be reversed. Current year create, last year provision will be reversed. Understood? Correct, Krishnamurthy? But have you understood this interest income calculation? Interest income calculation you have understood. I have done this way so that you can understand interest calculation. Have you understood this? Hello. Yes, sir. This you have understood. Now, second they have asked to calculate actual return. Actual return. So in this, first can you give me what is the fair value of plan asset at year end? At year end, what is the fair value of plan asset at year end? The fair value of plan asset at year end is given 15 lakh. So 15 lakh write down. Then find out the carrying amount of plan asset at year end. So what is the opening balance of plan asset? It was 10 lakh. Then plus contribution received is 4,90,000. Then minus benefit paid 1,90,000. So this become the carrying amount. This become carrying amount without interest calculation. Without interest calculation. So this become how much? 13 lakh. Correct now. So this become now 13 lakh become 15 lakh. So this 2 lakh become actual return. This 2 lakh become actual return. Understood? So this become actual return. This become actual return. Now we need to find out what is the actual gain or loss. We need to find out what is the actual gain or loss on plan asset. बताओ, what is the actual return? Actual return is 2 lakh. But what is the interest income calculated based on discount rate? So this was our actually expectation, 1,17,000. 1,17,500 is expectation. So whatever we have earning, whatever we are earning more than our expectation, that become actual gain. So what is our actual gain? Actual gain will become 2 lakh minus 1,17,500, that is 82,500. 82,500. Understood? So this actual gain will be also transferred to OCI, and that will not be recycled to PL. That will not be recycled to PL. Now you can see there is one actual gain on plan asset 82,500, and there is one actual loss on defined benefit obligation, that is given how much actual loss has been given the question 6,000. So 6,000 is the actual loss. The net gain is net actual gain is how much? 82,500 minus 6,000. So 76,500 will be transferred to OCI. Will be transferred to OCI. Correct now, and accumulated in separate component of equity in the statement of changes in equity, and that will not be recycled to PL. Have you understood this particular point? This was asked in question. Have you understood the entire thing? This question can be asked. This is one expected question for 5 marks, or this can be asked in MCQ also, multiple choice question also. Got this point? I'm expecting this question this time because this has been given in RTP, till now not asked in exam. Have you understood this? Yes, sir. Hello. Now coming to one more question. This question number 3 is also very popular question. Question number 3 is also very popular question. On 1st April, the fair value of plan asset, fair value of the asset of XYZ defined benefit plan were valued at 20,40,000, and the present value of defined benefit obligation is 21,25,000. You can see plan asset defined benefit obligation. So what is the opening balance? This opening balance is given 20,40,000, and this opening balance is given 21,25,000. So for this type of question, they will ask you to calculate actual gain loss, which will be calculated as a balancing figure from this statement. On 31st March 2002, the plan received contribution amounting to rupees 4,25,000. The plan received contribution, so your plan asset will increase. So you can see contribution received, your plan asset will increase by 4,25,000, but this will not affect what your defined benefit obligation. Understood? What journal entry will do? Plan asset account debit to bank. Plan asset account debit to bank. Then they have given plan paid out benefit, paid out benefit of 2,55,000. Whenever benefit is paid out of plan asset, there are two journal entry. One will withdraw the amount from plan asset. So journal entry will bank account debit to plan asset. Your plan asset will decrease, and whatever amount has been withdrawn, that will be used to pay the defined benefit liability. Is it that we reduce your defined benefit obligation also? So what journal entry will do? Defined benefit obligation account debit to bank. So this will reduce both plan asset as well as defined benefit obligation. You can see benefit paid, we reduce both. Benefit paid, we reduce plan asset as well as defined benefit obligation. Understood this point? This point have you understood? Follow. Sir, can you once revise the meaning of actual gain or loss? Acha, I will come to that. First, let us do this question. I'll come to that. Okay, then current service cost for the financial year ended is 5,10,000. The current service cost will increase your present value of defined benefit obligation. Per journal entry will do current service cost account debit to defined benefit obligation. You can see current service cost will increase your defined benefit obligation. Understood? Yes, sir. An interest rate of 5% is to be applied to the plan asset and obligation. So this is the discount rate. So discount rate will be used to calculate interest cost on defined benefit obligation and interest income on plan asset. You can see in this question, on 31st March 2002, the plan received contribution and amount was paid for benefit, paid out benefit also on 31st March. So on closing date, contribution has been received and benefit has been paid, so that will not be considered for interest calculation. So for this type of question, interest will be calculated always on opening balance. However, in the previous question, because benefit was paid and contribution was received at the mid of the year, therefore we need to be careful about interest calculation on that particular question. But in this case, interest will be calculated on opening balance. You can see 5% interest income is calculated on 20,40,000, and 5% interest expense has been calculated on 21,25,000. This you can easily calculate. Yes, this will increase also your plan asset and defined benefit obligation. Now the fair value of plan asset as on year end is 23,80,000, and the present value of defined benefit obligation is 27,20,000. So they have given closing balance. So this become was the closing balance of plan asset and closing balance of defined benefit obligation. Any balancing figure in this statement will be remeasurement gain or loss. Understood? Have you understood? So if the amount is this balancing, this become balancing figure. If the balancing figure is coming in positive, in asset side, if it is coming plan asset, if it is positive, means it become actual gain, because that is increasing the plan asset. So you can see it is become actual gain. But if the liability is increasing, that become actual loss. If the liability is increasing, that become actual loss. So I will suggest you to do in this way. First find out the total up to this. In exam, do in this way. First find out total up to this, then compare the total with this, and automatically the asset is increasing, then it become actual gain. And the liability is increasing, the balancing figure will become actual loss. Correct? So they have asked you to calculate that only. Provide a reconciliation from the opening balance, the closing balance from plan asset and defined benefit obligation. Also show how such amount should be shown in the statement of PL and other comprehensive income in balance sheet. Now let us prepare one extract of statement of PL. Token is a current service cost, net interest cost. Net interest cost means what? This minus this, net interest cost, and bus only this. Current service cost and net interest cost will be shown in SOPL. So you can see current service cost 5,10,000 and net interest cost on net defined benefit liability means 1,06,250 minus 1,02,000 will be shown in the statement of PL. The net actual gain or loss, you can see the actual loss is more than actual gain. Remeasurement loss is more than remeasurement gain. So actual loss, actual gain, remeasurement gain or remeasurement loss are interchangeable word. So 2,33,750 minus 68,000. So you can see this other comprehensive income will show loss on defined benefit obligation. How much? 2,33,750 and gain on plan assets 68,000. However, this will be shown as a net amount only. This will be shown as a net amount in other comprehensive income. In the balance sheet, can I say this? What is the defined benefit obligation? 27,20,000 minus fair value of plan asset 23,80,000. This is shown under non-current liability under the head provision. You can see in balance sheet, this net defined benefit liability will be shown under non-current liability under the head provision. 3,40,000. This is the difference between present value of defined benefit obligation and the fair value of plan asset as on year end. Understood this point? Understood this point? Correct. Now, what is remeasurement gain or loss? Just try to understand. What do you mean by remeasurement gain or loss? When we say present value of DVO, so this become opening balance of DVO. In this we add current service cost. We'll also add interest cost. We'll also add past service cost. Past service cost is the cost which increase the present value of defined benefit obligation due to any amendment or modification in the plan. That is the past service cost. Correct now. Now, if suppose this opening balance changes due to changes in actual assumption, we do remeasurement of opening balance. Suppose these all are based on actual assumption. So assumption may change in this year, current year. So due to changes in assumption, if the opening balance changes, that changes is known as remeasurement gain and loss of DVO. Correct. And that will not be transferred to PL, that will be transferred to OCI. Understood? Any changes in the opening balance of DVO due to changes in actual assumption is known as actual gain and loss. So in exam we are not supposed to calculate that changes in opening balance. They will give you the closing balance. So if they have given closing balance of DBO, so the difference of these will be automatically the remeasurement gain or loss. Remeasurement gain or loss. Understood is fine. I mean, so similarly in plan asset we write an opening balance. For plan asset we write an opening balance first. Then this will be added by contribution received minus benefit paid, correct now, plus interest income, correct. Understood. So this become the amount, but suppose the closing balance of plan asset, suppose this is 10 lakh and the closing balance of plan asset is 11 lakh. It means, can I say, there is some remeasurement gain. Is your expectation was this much interest income, but you earned more than that. So that is known as remeasurement gain or loss on plan asset. If you are earning more than expectation, that become remeasurement gain on plan asset. If you are earning less than your expectation, that become remeasurement loss on plan asset. That remeasurement gain or loss will be transferred to OCI. Understood? Have you understood now? Was a doubt of Arvindam. Arvindam, have you understood now? Remember remeasurement gain or loss? Yes, sir. Got this point? Yes, sir. Coming to the next question. So this is also one of the important question which has already asked in exam. This type of question have been also asked in exam for 5 marks. Correct now. Now this type of question can be also given in MCQs. MCQ में पूछ सकता है. They will ask you how to, what amount will go to SOPL, what amount will go to OCI. That type of question can be asked. This also we have done. 5 also we have done. Come to 6. SA Private Limited is engaged in the business in the retail, having 100 retail outlets across northern and southern India. SA Private Limited is this given plan asset. Now they have given opening balance of plan asset 10,000. Contribution to plan asset on 31st March. Normally they will give contribution and benefit paid on 31st March. But they have given at the mid of the year or at any point of time during the year. Be careful about interest calculation. Understood? Contribution received 3,000. Amount paid means this benefit paid is 300. As on 31st March 2002, the fair value of plan asset is 14,700 and actual return, they have given actual return on plan asset 2,000. They have given actual return on plan asset. Correct now. It means, can I say, if they have given actual return, you can easily find out what is actual gain or loss. Correct now. So just try to understand. Suppose this is the opening balance. Opening balance. What is the contribution received? 3,000 plus करेंगे. Then 300 is minus. Correct. What is the total of this? This is how much? 13,000. This become 12,700 and the closing balance is how much? 14,700. The difference is nothing but actual return only. So that is, if even though not given, we can easily calculate this become actual return. Now if you find out interest income based on discount rate, then we can easily calculate the actual gain or loss. Is even though this actual return is not given, we could have calculated this. Now defined benefit obligation, opening balance given 12,000, closing balance they have given 15,500, actual losses they have given 100, current service cost they have given 2,500, benefit paid they have given 300, discount rate is 10%. Now in this case interest cost will be calculated on 12,000, so 12,000 into 10%, this can I say it become 1,200, and in this case the interest will be calculated on 10,000 based on this. So this is what 1,000. You can see 2,000 is actual return. However, my expectation was 1,000. So what is our remeasurement gain on plan asset? The remeasurement gain on plan asset will be 1,000. And in this case, the remeasurement loss on DBO, they have already given 100. Now what they have asked? As per Ind AS 19, please suggest if there is any amount based on above mentioned information that will be taken to OCI. So yes, the remeasurement gain or loss on plan asset is 1,000 and the remeasurement loss on DBO they have given 100. This is minus 900 will be taken to OCI. 900 will be taken to OCI. Also compute the net interest on net defined benefit liability. That already also we calculated. This become 1,200 and this is 1,000. So 1,200 minus 1,000. So 200 will be the net interest cost. 200 will be the net interest cost. That only given. Very simple. Means this question is super easy. Super easy. 900 will be taken to OCI and 200 will be the net interest cost. Chalega. Then other information is given then that you can calculate. Got this point? Yes, sir. Now this question number 7 is newly inserted question. Good question, can be asked in exam. There is one mistake in the question. We'll try to ignore that mistake and we'll try to answer as per ICR solution, because at this point of time, if I will rectify the mistake and the same questions come in exam and same suggested solution is given, you will be worried about that. So you need to follow ICR solution only. Yes or no? So from the following particulars, compute the net defined benefit liability and expense to be recognized in PL. You can see they have given balance at the beginning. This is defined benefit obligation current year, and this is defined benefit obligation of previous year. So let us start with previous year. This is the opening balance of previous year. Then current service cost will be added, interest cost will be added. Now changes in demographic assumption, changes in financial assumption, this experience variation, this total become actuarial loss. This total become actuarial loss. So actuarial loss will increase the liability. You can see all these three has increased the liability. So this is the remeasurement loss. This is the remeasurement loss. So remeasurement loss is what changes in assumption. There are two type of assumption. One is demographic assumption. One is financial assumption. So changes in demographic assumption, changes in financial assumption. And there is experience adjustment. Experience adjustment means what? Whatever you expected and the actual is different. Means you have estimated your liability is 1000, but actually you paid 1200. So you have paid extra 200. That is also known as actuarial gain or loss. That is also known as actuarial gain or loss. That is known as experience adjustment. Chalega? Yes, sir. Then benefit paid is 4.46. This will be minus. इसको minus करेंगे. Investment income. Investment income. Not coming. Investment income. I think typo mistake है. Investment income will not come यहाँ पर. Investment income will come यहाँ. Understood? Correct. This will not come यहाँ पर. This will be interest cost. One minute. You can see this is also not correct. So this is benefit paid. My mistake. I have. This is benefit paid. Benefit paid is 0.61. This will be minus, and this was experience adjustment. थोड़ा सा mistake. I'm not reading. 1 minute. Interest cost was how much? 3.56. This was interest cost. Interest cost will be added. I was also confused. Interest cost will be added. These three are what? Actually a gain or loss. And this was benefit paid 0.61. Investment income is 0. Investment income is 0. So this will become the closing balance. This will become the closing balance. And this closing balance will become the opening balance of this year. Means actually this information was not required only. If you want to find out actual gain and loss of current year, so you want only opening balance. Want only opening balance. Opening balance may you will add current service cost, you will add interest cost, you will add this actual loss, you will add this actual loss, you will minus this actual gain. Correct. Now benefit paid was nothing. Correct. Benefit paid was nothing, so this will become closing balance. Closing balance you can find out. Closing balance. This become closing balance. Now coming to plan asset. Plan asset opening balance is what? 14.65. Then benefit paid 0.61 minus. Then investment income. Now investment income means what? Interest income calculated by using discount rate. So this is 1.12 investment income. So this is investment income. This is investment income calculated by using discount rate. Discount rate. Then employer contribution will be added. Now they have given return on plan asset. Actually, from my point of view, this should not be return on plan asset. This should be actual gain or loss. This should be actual gain or loss on plan asset. This was the mistake in the question. If they have given return on plan asset, but this should not be return on plan asset, this should be actually gain on plan asset, because return on plan asset will will be will have two components. One is interest income calculated by using discount rate, and then remeasurement gain or loss. Correct now? Means what is the formula? Means first we calculate actual return. From this we minus interest income calculated by using discount rate. Correct now? This is minus, and this is known as remeasurement gain and loss. So it means actual return is nothing but sum total of these two. Sum total of these two. I hope you are understanding. So this is actually, I will say, typo mistake. It should not be return on plan asset. This is given. This is actually gain or loss. So this should be considered as actually gain or loss. And after this will become closing balance of last year, which will become opening balance of current year, and then we can find out closing balance of current year. Understood? Means all the information has been given. Only you need to put all the information. You can see this closing balance calculated. This become opening balance, then this become closing balance. This closing balance calculated, this become opening balance, then you calculated closing balance. Now what they have asked? From the following particular, computer net defined benefit liability and expense. Net defined benefit liability of the current year will be this minus this. For previous year will be this minus this. We are showing previous year figure also. Correct? Then they have asked what is the expense to be recognized in PL. The expense to be recognized in PL will be current service cost plus interest cost, correct, plus net interest is net interest cost. So interest cost minus interest income of the current year, that will be shown. Current service cost plus net interest cost. Net interest cost will be interest cost minus investment income. Actually gain or loss will be shown in OCI. They have asked in SOPL. So SOPL, if I am saying SOPL has two parts, PL and OCI. So in OCI will go, but this become the actuarial. This become the actuarial gain or loss on DBO, and this become what 2.1 to become actuarial gain or loss on plan asset. Actual gain or loss on, if it is positive means it is actual gain. The net amount will go to OCI. I hope you have understood. Have you understood this particular point? Have you understood? To that only they have shown. Check karenge. In the balance sheet, the net defined benefit liability to be recognized for the year ended 31st December 2001, means previous year, is 63.25 minus 21.81, and for the current year it is 75.07 and minus 33.39. And in SOPL, this is what SOPL. So this is defined benefit obligation plan asset. However, you should not show in this way. To write down in SOPL format. So current service cost of current year will be 5.84. Previous year it will be 4. Interest cost. So this will be net interest cost. Net interest cost will be 4.27 minus 1.47 and 3.56 minus 1.12. But they have not shown the actual gain loss. Means OCI they have not shown. I don't know why they have not shown. So you should also show OCI. OCI will be what? So this become actuarial loss. Actual loss of current year, and this become actuarial gain on plan asset of current year. So these minus this will be the net actuarial gain or loss to be shown in OCI. This is the actuarial loss on plan asset for previous year, and this is the actual loss on plan asset. This is actual loss on DBO. This is actual loss on DBO. This is the actual loss on plan asset. So total actual loss will be shown in the PL of previous year. Have you understood this particular point? Cool. Got this? Any doubt? No doubt. So this can be one of the expected question. Now this question number 8 is also a good question. Can be asked in exam. This is simple question. Let us read. Arunachalam operate a defined retirement benefit plan for the current and former employee. Given the large size of the company, it engaged a firm of actuaries for advice on the contribution level and overall liability. On 1st April 2001, the actuarial valuation of the present value of DBO is 15 crore and the fair value of plan asset is 13 crore. 15 crore, 13 crore. Check karo what they have given. Reconciliation they have made, they have prepared one account. So we can prepare one account also. You can see 15 crore they have converted in lakhs is the opening balance. Plan asset, it is 13 crore in lakhs, it is 1300 lakhs. चलेगा. Then they have given on 1st April 2001 the annual market yield based on government bond is 5%. So we'll calculate interest cost. We can see they have calculated interest cost 5% on opening balance 75, and here it will be interest income 5% on opening balance, that is 65. They have calculated. I'm just showing the account also. Then during the year Arunachalam made contribution of 1.75 crore. So increase your plan asset. You can see plan asset account debit to bank, we write down. Plan asset account debit to bank. Plan asset account debit to bank is 175 lakhs. Crore also you can add on. I don't understand why they have given in crore. Write down in crore only na. Why you are writing in what lakhs? Write down in crore only. It is 1.75 crore. Chalega to bank. Then what is given? And the plan paid out benefit of 1.05 crore. So what journal entry? There will be two journal entry. One is what bank account debit to plan asset. Plan asset will decrease, and one is DBO account debit to plan asset. DBO will also decrease. So DBO account, take a DBO account debit to bank means they have adjusted with plan asset. You can see DBO account debit to bank 1.05, and you can see bank account debit to, I think they have written bank account debit to DBO. So they have written bank benefit paid means they have written one example plan asset account. So you can see by defined benefit obligation benefit paid 1.05. However, you can say two journal entry. One is plan asset account debit to bank, then DBO account debit to bank. Understood? Yes, sir. The next point is what? The actuarial firm estimated that current service cost is 1.55 crore. That will increase your DBO. So journal entry is what? Current service cost account debit to DBO. Current service cost account debit to DBO. So by current service cost 1.55 crore. Yes, sir. This also done. Yes, sir. Next point is what? Check करेंगे. On 28th Feb, the rules of plan were amended. So there will be some past service cost. They have given that the past service cost, the retrospective effect is 37.5. So amended with retrospective, which led to increase in present value of defined benefit obligation. This is known as past service cost. So what journal entry will do? Past service cost which will be transferred to PL account debit to DBO. So you can see past service cost. So even by past service cost 37.5 means in lakhs. In crore it was how much? 37 lakhs only given. 37.5 lakhs. So in crore it will be 0.375. Chalega? Yes, sir. During the year ended 31st March 2002, Arunachalam was in negotiation with the employee representative regardless of plan redundancy. Some employee left the company, so the plan will be cancelled. It is quite possible that we need to some settlement here. So there can be some gain on settlement. Means that what you are paying, that will be benefit paid, and if you are paying less than actual liability, that will be known as what? That will be known as gain or loss on settlement. So these negotiations were completed shortly before the year end, and the redundancy package were agreed. The impact of this redundancy was to reduce the present value of DBO by 2 crore. Means liability was 2 crore, but the amount payment was 1.875 crore. So this is the benefit paid. Once again, benefit paid is 1.875 crore. Benefit paid, what will be journal entry? That will decrease both DBO and plan asset, because benefit will paid out of plan asset only. What journal entry? Plan asset account debit to bank. So you can see plan asset account debit to plan asset account debit to bank. Correct? What was the amount? It was 1.875 crore. 1.875 crore. Correct? Yeah. So what they have written? So what journal entry will do? Journal entry is what? Sorry, this is first we'll withdraw the amount from plan asset. It will be bank account debit to plan asset. You can see by bank you can add on 1.875 crore. 1.875 crore, and the amount, the defined benefit obligation will also decrease. DBO account debit to bank. In this, actually they have done this entry. You can add on to bank. It will be 1 187.5, whatever paid, 187.5, correct? And the gain on settlement is how much? 2 minus 1.875 minus 1.875, coming how much? 0.125. So gain on settlement you can write on DBO account debit to gain on settlement, that is how much? 12.5. So ultimately the total will be 200 lakhs only, correct? So basically we pass two journal entry. This journal entry is what? Just try to understand. DBO account debit to bank. DBO was 200 lakh, to bank was 187.5, and the difference will be gain. Gain will be also calculated now. So you can pass to journal entry or you can add on two criteria and settlement, whatever your choice. So this will become this much. You understood? Correct. Then they have given closing balance of what? Present value of defined benefit obligation and fair value of plan asset. This become closing balance. So closing balance will be at this side and at this side, correct? So difference, the balancing figure of this account will be actual gain and actual loss. So this become actual gain and loss, which will be transferred to us. Same question with more information. Understood this point? Correct. This, now they have asked how to present this in balance sheet. So balance sheet you can see previous year, current year. The present value, this is closing balance, this become net defined benefit liability. This is the closing balance of last year. The closing balance of last year means opening balance of current year. This is previous year figure. Statement of year, current service cost will come, past service cost will come. Now you can see gain on settlement, they have written 12.50, that only I was mentioning. And net interest cost, means interest expense minus interest income, that will be 10. This will be the total in SOPL. Now in other comprehensive income you can add on actual loss, and then this is not return on plan asset, this is actually remeasurement gain on plan asset. So remeasurement gain on plan asset, which has been calculated a balancing figure. Balancing figure, if you see, 152.5 was gain and 237.5 was loss. So you can write on net amount or you can write on in this way, your choice. So this becomes the total other comprehensive income in negative amount because it is a loss. At this point, so this question is also expected in exam. Newly inserted question. I have a similar question was there, but we can say newly inserted. So this can be one expected question exam. Here they may ask you account also. The account was a part of working note. I will say don't prepare account. If they ask, you can do in a statement format. Better do in a statement format what we have done in previous question. The statement format, that will be easy to understand. Correct? Means I will just revise the statement. For you all. Chapter is over from my point of view. Now if you have any question in your mind, you can inform me. If you have any question in your mind about India's 19. Have you understood the last question? Bolo. This is India's 19. Normally my class I used to give this statement. This statement is for what? DBO and plan asset. So DBO, first we write on opening balance. Then we write on current service cost in DBO. In this, current service cost will not come. Then we write on net interest cost. Is interest cost यहाँ पर and interest income यहाँ पर. Past service cost will come यहाँ पर. Past service cost will not come यहाँ. Contribution received will come in plan asset. It will be added. Benefit paid will come in both, and this will be what? Negative amount. This will come in negative amount. Gain on loss on settlement will come यहाँ पर. Gain on loss on settlement means liability amount and the actual payment. That the difference will be gain on loss on settlement. This will be balancing figure in exam question. This given in the question, this you can calculate as a balancing. So this become one statement of reconciliation. Now current service cost will go to PL. Net interest cost to income will go to PL. Past service cost will go to PL, and gain or loss on settlement will go to PL. This remeasurement gain or loss will be transferred to OCI. And this net amount will be shown in the balance sheet. Under the head non-current liability. Under that head provision. Understood. Have you understood this? Follow. This much have you understood? Any doubt? Chalo. Got this point? Yes, sir. With this, India's 19 is over. Now let us come to India's 12. Come to India's 12. Now India's 12 is also totally based on question. Now India's 12, before I start any question, I'll just like to say, for asset, for asset and for liability, first we calculate carrying amount, then we calculate tax base. Correct? So this will become temporary difference. Now for asset, carrying amount is more than tax base, then that is taxable temporary difference. And if carrying amount is less than tax base, then that is deductible temporary difference. And it will be reversed for liability. Carrying amount is more than tax base, then it is deductible temporary difference. And carrying amount is less than tax base, then it is taxable temporary difference. This you know. Only question are sufficient right from exam point of view. This India's 19, I will say question is only because they will ask question only until unless they will not ask theory question in exam. Correct? Now, so if you do much question and do some more question, whatever is given in the book, that from that only question will ask. Is from my point of view, from India's 19, they will not create any new question. They will not create. But they also don't know how to create a new question for India's 19. Chalega? So no question from long-term employment benefit and termination benefit given in the ICS study material. But termination benefit, one question can be asked. Suppose termination benefit, the termination benefit is payable after 12 months. Correct? After 12 months, then we need to calculate provision for termination benefit at discounted amount. But if it is payable within 12 months, then undiscounted amount. So this type of question can come in what? In MCQ based question. However, no question has been given for long-term employment benefit and termination benefit. Long-term employment benefit, same to same concept of defined benefit plan will be applicable. Defined benefit plan will be applicable. Means whatever you have done for defined benefit plan, long-term employment benefit, same treatment done. Only one difference is that in case of defined benefit plan, the remeasurement gain or loss will be transferred to OCI. In case of long-term employment benefit plan, remeasurement gain or loss will be transferred to PL. This is the only difference. The entire other accounting treatment remains same. However, they have not given any question on long-term employment benefit. Chalega? If the question is means nothing, means whatever question they have given, that is for what? Defined benefit plan. Chalega? Understood? Because a new question will be done. If they are asking new question, that is new question for everyone. Correct now? So don't worry about that right now. Right now you should not worry about that. Correct? Got this point? Yes, sir. What I was saying. Have you understood this particular point for India's 12 deferred tax? Now taxable temporary difference will create DTL. Deductible temporary difference will create DTA. This will be DTA. This will be tax. This will be DTL. Correct? Understood? Understood. This is the general point. Now there is one point. The tax base is the value of assets and liability as per income tax book. Is if you are preparing your books of account as per income tax act, then what will be the value of assets and liability? That become tax base. But there is one rule, a simple rule I will say only for understanding. If there is any permanent difference, there is any item of permanent difference, is the any expenses which has been is allowed forever, that become an item of permanent difference. If there is any item of permanent difference, then in that case deferred tax will be zero. That case deferred tax will be zero. So in that case tax base will be equal to carrying amount. Tax base will be equal to carrying amount. So that the difference is the, I will say, brief understanding of this chapter. Brief. If you know this much, then you can attempt any question. You can attempt any question. Can we start? So question number 1 I will come at the end. Come to question number 2. X Limited prepare consolidated financial statement to 31st March each year. During the year ended 31st March 2018, the following event affected the tax provision of the group. They are asking the tax provision of the group financial statement is consolidated finance. Y Limited is a wholly owned subsidiary of X Limited. Made a loss adjusted for tax purpose for 30 lakh. So they have a loss adjusted for tax purpose. Means they have a tax loss. So on can I say unused tax losses also we create deferred tax liability, because that is also deductible temporary difference. So any tax losses which can be carried forward, on that also we create deferred tax asset. Now deferred tax asset will be created only to the extent it is probable that future taxable income will be available against which such DT can be utilized. This can I say we can create deferred tax asset only when it is probable that future taxable income will be available against which such deductible temporary difference can be adjusted. If there is no future taxable income, then we will not recognize any DTA. Understood this point? I hope you know. I hope you know this point or not. Y Limited is unable to utilize this loss against previous tax liability. Income Tax Act does not allow Y Limited to transfer a tax loss to other group company. Understood point? However, to allow Y Limited to carry forward a loss and utilize it against the company future taxable profit. The directors of X Limited do not consider that Y Limited will make taxable profit in foreseeable future. There will be no future taxable income, and therefore on this no DTA will be recognized. First point, have you understood? Second, just before 31st March 2018, X Limited committed itself to the closing a division after the year end and making a number of employees redundant. So they are committed to one restructuring program. This is 37 means you need to create a provision for restructuring. Therefore, X Limited recognized the provision for closure cost of 20 lakh in the statement of financial position as on 31st March 2018. Income Tax Act allow tax deduction for the closure cost only when the closure actually take place. This case is a carrying amount 20 lakh. The tax base, because it is not allowed right now, it will be allowed only in the year when it is paid, will be 0. Now for liability, carrying amount is more than tax base, so it is deductible temporary difference of 20 lakh on which DTA will be recognized at the tax rate given. Tax rate is how much? 20%. So we should get DTA at a rate of 20%. But provided future taxable income will be available, so what is given? In the year ended 31st March 2019, X Limited expect to make taxable profit which are well in excess of 20 lakh. It means the taxable income will be available against which such DTD can be utilized, and therefore we can recognize DTA on such deductible temporary difference. Chalega? Yes sir. During the year ended 31st March 2017, X Limited capitalized the development cost to satisfy the criteria in paragraph 57 of Ind AS 38. Means they have recognized one intangible asset on for the year ended 31st March 2017. The total amount capitalized was 60 lakh. The development project began to generate economic benefit from 1st Jan 2018. Means can I say for the first year depreciation, amortization will be only for 3 months. 16 lakh was the cost price. On this amortization will be for 3 months. The director estimated the project generate economic benefit of 5 years. So 16 lakh divided by 5 equal to how much? It is 3.2 lakh. For 3 months you will divide by 12. It is 80,000. 80,000 you deduct. What is the carrying amount? Carrying amount is 15 lakh 20,000. 15 lakh 20,000. The development expenditure was fully deductible against taxable profit for the year ended 31st March 2018. Means this totally allowed. Means the tax base of that development expenditure, means that asset will be nil, because it is totally allowed as expense, so it is nil. Now it is an asset and the carrying amount is more than tax base, so it is taxable temporary difference of 15 lakh 20,000, and therefore on this DT will be created at a rate of 20%. I hope you can do it. Chalega? Aage chale? Yes. On 1st April 2017, X Limited borrowed 1 crore The cost to X Limited of arranging the borrowing was 2 lakh. Now we know that as per Ind AS 101, transaction cost will be deducted from 1 crore. 1 crore minus 2 lakh, it is 98 lakh. 98 lakh. And the cost qualified for tax deduction on 1st April 2017, but as per Income Tax Act, this transaction cost will be allowed as an expense. The loan was for 3-year period. No interest was payable on the loan, but the amount repayable was itna 1 crore 30 lakh. Means it was repayable at premium. This equate to effective annual interest of 10%. So as per Ind AS 109, we need to recognize interest amortized cost by applying EIR to 9 lakh 80,000 will be the interest expense, and there is no contractual cash outflow because the interest payment is nil. So this become how much? 98 lakh plus 9 lakh 80,000. This will become how much? 1 crore 78 1 crore 7 lakh 80,000. 1 crore 7 lakh 80,000. Correct. So this become the carrying amount of liability, and the tax base of liability will be how much? 1 crore only. The tax base of liability will be 1 crore. Tax base of liability will be 1 crore. Now the liability, you can see carrying amount is more than tax base. Therefore, this will be deductible. Temporary difference, that is what? 7 lakh 80,000. On this 7 lakh 80,000, once again you to create deferred tax asset, because already it is given that we have future taxable income against which such can be utilized. So on this 7 lakh 80,000 also will create deferred tax asset. So last wala 7 lakh 80,000 to 20%, that is 1,56,000 due to availability of taxable profit. Asset can be recognized as a deduction from deferred tax liability. Of course, DTL and DTA will be set off, and that amount will be shown in the balance sheet. Chalega? Yes. Understood? Question number 2 understood? Hello everyone. Are you able to follow me or not? Have you understood this? Everyone respond. You are not responding now. Because I am also teaching from morning 6. Morning 6 to 10 was my regular class. Then I came for live class 11 to, I think I have taken class up to 5:30 for you all. Then from 7 to 9 I was in gym. For 2 hours I was in gym. Then again came, and 10:15 I am taking the class. It's fully tired. So whatever you are also working for 15 hours. I am also working for 15 hours. So both are same. I am also CA. You are also CA. Every CA need to work for 15 hours per day. Means before becoming CA and after becoming CA, you need to work for 15 hours. The just right. The difference is what? I am working for others. So I need to earn money for others, my family. Therefore I am working. You are working for yourself. You are studying, you are learning to gain knowledge for yourself. You should be more dedicated towards your working. Understood? But I am working not for myself. I am working to earn remuneration, means earn income to survive my family. Just try to understand. Chalega? So I am also working for 15 hours. You are also working for 15 hours. Both are same. Both are same. Both are same. ठीक है, तो रेस्पॉन्ड करो. अभी राइट नाउ यू आर फीलिंग स्लीपी और यू आर ओके? नींद आ रहा है? आर यू फीलिंग स्लीपी? Correct? Just try to understand. Right now, I can motivate you, but my motivation will last for only 1 hour. You need to motivate yourself. Whatever you are doing for yourself. You will become CA, you will get benefit, your family will get benefit, your family will become happy, you will become happy. So whatever you are doing for yourself. Work for, I will say, entire 24 hours. Entire 20, if it is possible right now, this last moment is the crucial moment. If you can survive in this last 7 to 8 days, you will become CA. You will become CA. Definitely you will become CA. Chalega? Yes, sir. Let us come to one more question. A Limited prepare financial statement 31st March each. The rate of income tax applicable to A Limited is 20%. The following information relate to the transaction of assets and liability. A Limited has 40% shareholding in L Limited. A Limited purchased this shareholding for 45 crore. The shareholdings give the A Limited significant influence over L Limited but not control. So it become an associate. Now, A Limited account this by using equity method. Equity method, the carrying amount they have given as per Ind AS 28 as on 31st March 2001, 70 crore, and as on 31st March 2002, 75 crore. But can you say under income tax act Ind AS 28 will not be applicable? Under income tax act this investment will come at cost price only. So under income tax it will be 45 crore. Tax base will be 45 crore. Correct. So now simple. I think you need to find out in the tax deduction. This point is given. You can read it simply. Just try to understand. This is current year. This is previous year. This is 31st March 2001. 31st March 2002. What is the carrying amount? Carrying amount is what? 70 and 75. 70 and 75. What is the tax base? Tax base is 45 and 45. So the initial carrying amount is more than tax base. So it become what? Taxable temporary difference. So it is 70 minus 45. 70 minus 45. This is 25. This is 30. Correct. Of course, you will create DTL. DTL at what rate? DTL at what rate? Batao. It is given the question. DTL will be created at what rate? Is given 20%. 20% at a rate of 20%. दे दो. At the rate of 20%. So 25 into 20%. It is 5, and this will be 6. Now they have asked you how much deferred tax will be recognized in current year. So you can DTL 5. Now it becomes 6. So difference is what? 1. This will be the deferred tax expense of current year. Deferred tax expense of current year, and this will be transferred to PL. This will be transferred to PL. This has been asked in the question. Chalega, आगे चले. One more question is there. This is also important. A Limited measure the head office building using the revaluation model. The building is revalued every year on 31st March. On 31st March 2001, the carrying amount of building after revaluation was 40 crore, and its tax base was 22 crore. You can see opening balance and opening tax base is given. During the year ended 31st March 2002, A Limited charged depreciation in SOPL 2 crore and claimed a tax deduction of 1.25 crore. On 31st March 2002, the building was revalued to 45 crore, but revaluation is not applicable under Income Tax Act. Now they have asked, this is the information given. Let me do. This is 31st March 2001. This is 31st March 2000. So what is the carrying amount given? Carrying amount initially given how much? It was 40, and then after revaluation become 45. But this 45 is what? 40 minus depreciation. Depreciation was how much? It was 2 crore. 40 minus 2 and plus, can I 7 will be revaluation gain. So this become 45. So this was the revaluation gain during the year, which has been transferred to revaluation surplus. Understood this point? Yes. The tax base is given. Opening tax base is given how much? 22, and then depreciation as per income tax is 1.25. 22 minus 1.25 is equal to how much? That is 20.75. 20.75. Chalega? Understood this point? Correct. You can see in this also there is a taxable temporary difference of 40 minus 22, that is 18. This is 45 minus 20.75, that is how much? 24.5. Now there is a rule. Rule is what? Whenever revaluation gain, there is any taxable temporary difference because of revaluation gain, so detail will be created on that, and that detail will be created through OCI. So what is the rule? The accounting effect of deferred tax will depend upon the accounting effect of a transaction on which deferred tax has been created. If the transaction has been transferred to PL, their deferred tax will be also transferred to PL. The transaction will be transferred to OCI, then their deferred tax will be also transferred to OCI. The transaction will be transferred to other equity, then deferred tax will be also transferred to other equity. This is the rule. So revaluation gain has been transferred to OCI, so their deferred tax will be also transferred to OCI. The rule have you understood? Correct. So initially there was a DTL at a rate of 20%. How much? 18 to 20% is 3.6. 3.6. Now on this 24.25 into 20%, this is 4.85. But out of that, just try to understand. On 7 into 20%, 7 into 20% is 1.4. This has been created during the year, and this will be transferred to OCI. This will be transferred to OCI. Correct. Now balance is what? 4.85 minus 1.4, that is 3.45. So 3.45 is the closing balance and opening balance was 3.6. You can see there is a reversal of DTL. Means closing balance 3.45 and opening balance 3.60. So how much DTL reverse? DTL reverse how much? 0.6. So that is 0.15. So this is a reversal of DTL. So this reversal of DTL is due to depreciation, and because depreciation has been transferred to PL, therefore this reversal will be also through PL. So this will be transferred to PL. This will be transferred to PL. So 1.4, this is 1.4, this is DTL created. This is DT expense through OCI, correct? And this is what? DT income, because reversal DTL will be DT income, so this will be reversal DTL through PL. Have you understood this particular point? This is a good question. If you have understood, I hope you will understand the solution also. Solution has been given in some other way, but if you try to understand this way, this is more easy to understand. Have you understood this particular point? Follow. Have you understood? Fast. If you have understood, I'll go to the next question. Also you have understood. This is one of the expected question. Question number 4. On 1st April 2001, P Limited is granted an 1 crore share option worth rupees 4 crore. So 4 crore is the fair value of option, subject to 2-year vesting period. The income tax law permit a tax deduction at an exercise date of the intrinsic value of the option, but the Income Tax Act will allow deduction based on the intrinsic value of the option on exercise date. This can I say Ind AS 102 accounting and the income tax allowance of expense are different. The intrinsic value of option at 31st March 2002 1.6 and 31st March 2003 is 4.6. The increase in the fair value of option on 31st March 2003 was not foreseeable in 31st March 2002. The option were exercised at 31st March 2003. Means the vesting day and exercise they are same. Vesting day and exercise they are same. Keep the accounting treatment. Now let me explain what they want to. This is 31st March 2000. This is 31st March 2000. 1/4/2001. On this date, option was granted. How many options was given? 1 crore. The fair value was 4 crore. Now can you say whenever there is equity settled SBP, the fair value of option granted will be recognized as an expense over the period of vesting period, and if there is no option which is going to be cancelled, so EB expense will be 2 crore, 2 crore. What journal entry you will do? Journal entry will be EB expense account debit to SBP reserve. Correct? Now they have given intrinsic value as on this date was 1.6 and intrinsic value as on this date was 4.6. 4 point, correct? Now just try to understand. At this point of time we are calculating deferred tax. What is the carrying amount of asset or liability? Can I say under Ind AS 102 there is no asset, no liability, because what journal entry you will doing? EB expense account debit to SBP reserve, and SBP reserve is equity. So there is neither asset nor any liability. So carrying amount will be nil. Carrying amount of asset or liability will be nil. Now tax base. Now tax base means what? The amount which will be allowed in future. So what they have given in the question, that as per Income Tax Act, the intrinsic value on exercise day will be allowed as a deduction. But can is this 4.6 not known at this point of time? It is given the question that this 4.6 was not foreseeable on 31st March 2002. Is if you want to calculate expected deduction, the expected deduction will be based on this intrinsic value. This intrinsic value is for the 2 year. So what is the intrinsic value of the, what is the intrinsic value allocated in first year? That will be 0.8 crore. So can this become expected deduction to be allowed in future for the first year, and whatever deduction to be allowed in future for first year, that become deductible temporary difference. That become deductible temporary difference, or you can say this become the tax base. This become the tax base. So tax base become 0.80, and you can see carrying amount is less than tax base, so this become deductible temporary difference of 0.80. 0.80. Have you understood this? Similarly, in the next year, carrying amount is once again nil. Now this 4.6 is already allowed as an expense in income tax act, already allowed now. So there is no expected deduction, there is no expected deduction, so this will also become nil. So there is no tax base become nil because there is no expected deduction to be allowed in future, because this is already allowed in second year, already allowed in second year, understood? Therefore it also become nil. So deductible temporary difference become nil. On this date we'll create DTA at a rate of, what is the rate of tax is 30%. At a rate of 30%, 30% will be 0.24, correct? 0.24, understood? And here it will be nil. So can I say whatever you have created in first year will be reversed in second year. So here will create DTA of 0.24 and here we reverse DTA of 0.24. So what journal entry will do? Here journal entry will be DTA account debit deferred tax 0.24, 0.24, and here the journal entry will be deferred tax account debit to DTA 0.24 and 0.2. Have you understood journal entry? This question is expected in exam. Have you understood this particular point? Lot of doubt is there in this particular question. Got this? Can we move to other question? Yes sir, we can move. Come to next point. This is a simple question, you can do it. I am not doing it. This is based on ROU asset and lease liability. Of course ROU asset and lease liability will have carrying amount, but there will be no tax base. Tax base will be 0. So you can find out carrying amount and then tax base below that will be taxable or deductible temporary difference, as the case may be. You can. This is based on business combination question. I hope this also is very simple. You can see fair value is given. Fair value. So in case of business combination, we need to first find out fair value of net asset. So this will become the fair value of net asset. This will become tax base of net asset. We'll find out difference. And if the fair value is more than tax base, we'll create deductible temporary difference. Sorry, that will be if the fair value is more than tax base. What is the amount? You can see fair value is 1070. The tax base is 920. All the information are given. So 1070, 920. Difference is what? Is 150. So because fair value is more than tax base, this will be taxable temporary difference. On taxable temporary difference, we create deferred tax liability. Deferred tax liability. So you can see deferred tax liability will be how much? What is the rate given? Now rate of tax for holding company is 30% and for subsidiary company is 40%. Because this is the INA of subsidiary company, tax rate of subsidiary company will be applicable. Therefore you should take 40%. 40% to 150 into 40% will create DTL of how much? 60 lakh. You will create DTL of what? Journal entry you will do. Journal entry will what? The INA account debit. INA will be 1070. DTL how much? 60 lakh. What is the consideration paid? Consideration paid is how much? Consideration paid H limited acquired for rupees 15 lakh. Consideration paid is 15 lakh, 1500 we can say. 1500. Difference will be goodwill. Goodwill कितना है बताओ? 1500 plus 60 minus 1070 equal to 490. You can see 490 is goodwill. You can calculate by using the formula given in business combination chapter. Fair value of consideration paid minus fair value of INA including DT and DTL. Understood now? This you can do it. So this type of question can be asked. Only be careful whenever tax based information is not given, then carrying amount of INA will become tax based. Carrying amount of INA will become tax based. Sometimes tax based information is not given, so carrying amount of INA will become tax based. In this question only one point is careful. Tax rate will be based on S limited, not H limited, because this is the INA of S limited. So it means that tax will be also based on the tax rate of S limited, not H limited. Chalega? This is one super point. Now this is also one good question. If we have understood that we need to create DTA based on the future taxable profit availability. Now, what India's 12 says that the taxable income should be assessed based on the taxable temporary difference availability. If there is a taxable temporary difference and their reversal pattern matches with the reversal pattern of deductible temporary difference, it means we have future taxable income. I'll just inform you by one question only. You can see in this question there is a taxable temporary difference relating to accelerated depreciation of rupees 1,24,000. These are expected to reverse equally over the next 4 years. So equally means 1,24,000 divided by 4. So it will reverse 31,000, 31,000, 31,000, 31,000 for 4 years. And this year then. So can you see if taxable temporary difference reversing, it will increase the taxable income of subsequent year. So that will be added to the taxable income. So this will increase the taxable income of the future year by this amount. Now they have given deductible temporary difference of 80,000 which I expect to reverse in 5 years. So that will be 20, 20, 20. Sorry, 80 divided by 5, 16, 16, 16. So 16,000 will be reversed in 5 years. So out of this 60 is for this 16,000 we have this much taxable profit. It means we have sufficient taxable profit, we have sufficient taxable profit, we have sufficient taxable profit, we have sufficient taxable profit. But for this we do not have sufficient taxable profit. Means for this deductible temporary difference we can create DTA, but for this 16,000 we cannot create DTA if there is no future taxable profit. Now it is given that it is expected that PC Limited will continue to make losses in next 5 years, means there is no probability of taxable income. So on this 16,000 will not create a DTA, but on this 16,000 into 4 will create DTA. So DTL will be on this entire amount. DTA will be on this particular amount. Have you understood? This particular question can be asked in exam. Have already been asked in exam. This similar question have been asked in exam. Now read it, you will be able to understand. Now question number 8 is based on reconciliation. This you do by your own because I am now tired, fully tired. Correct now. This is also, I think you can do it. Question number 8 and question number 9 you do by your own. This is a reconciliation question. I hope you can do it. Very simple. Very simple. With solution you will be able to understand. Do it, but important question. And question number 9 also do it. This is also good question. You can understand. These two questions today. This much only from my point of view. These two questions do it right now. Right now do it. Okay. I hope you have understood. So from my point of view, this much only. But this point. From my point of view, this much only. Correct. Today we have done India's 19 and India's 12. I hope you have understood. Bye bye. All the best and keep studying. Right now you are not going to sleep. Means you need to sleep as per your plan timing. Correct now. As per your plan timing. I don't know what is your plan timing for sleeping. You have a thing that you should sleep at this moment. You need to sleep for 5 hours, 6 hours, whatever your plan. Sleep for that particular hours. Then once again wake up in the morning. Once again start studying. Now in this coming hours is whatever number of hours left. You need to only study. You have only one job. Study only. Correct? Understood? Believe me, after becoming CA, you love to study, but you will have no time to study until unless you come into the profession of teaching. Right? Teaching is, I will say, learning is one of the I will say best thing in your life. You should not miss this. Right now you are learning to become CA. You are learning to become CA. To learn how much you can learn and just write exam and pass and become CA as soon as. Good night. All the best. Correct? And don't forget to subscribe the channel if you are new to this channel. Don't forget to like, press the like button. Press the like button. Love you. Bye bye all.